Is this crypto crash the end? I don't believe so. And I want to talk with you in this video about why the crypto markets are crashing right now. Historically, if this is actually weird or not, what's going on currently, and what are the opportunities in the market right now. There's a lot to get through, so let's get straight into it. First and foremost, a history lesson, okay? This is the 2017 bull run, okay? What a time to be alive that was. Look at all the volatility we had here. Look, from the initial breakout beyond previous highs, we had a wild run here, and then 32% crash. Then we had a 32% crash, a 29% crash, 31, 39, 40, 29. And huge days of 15, 20% crashes all over. So now crypto was much smaller back then. You're going to say, Lark, that doesn't count. That was back in the day, dog. What about something more recent as an example? Well, let's have a look back here at the 2020-21 bull run, okay? How about that? After the initial breakout beyond 20K, Bitcoin ran for about 4 or 5 weeks before seeing a 31% correction. Now, we have not run as far this time after the breakout. We got about 40, 45%, something like that, above the previous 74K high. Pretty good, right? Obviously. Now, if we see a 20% crash or something like correction, that wouldn't actually be all that crazy, would it? No. Then, of course, we had this one here, 25% correction after hitting 58K. We smashed down to 43K. Crazy. Ran back up again, 43 up to 61, 20% down again. Then from 49 up to 64. Now, that then was followed by basically the sell in May and go away summer doldrums of 2021, where the price dropped 55% before finding a bottom in July, rallying higher with a 25% crash in the middle, big crash right here, all kinds of day-to-day volatility, 15, 20% crashes all over the place, before finally topping out at 69K. This market is notoriously volatile. In case you did not realize that, if you're just getting into the game, welcome to the party, pal. It's crazy out here, man. So where are we at right now for Bitcoin? Well, after hitting 108K the other day, we are currently down 13.3%. Okay, critically coming up on the 50-day EMA right now. I'm going to be posting this about 12 hours after recording it. Maybe we hit that, maybe we don't. That would, of course, be key price support to watch out for. It would not be insane to see this tested if we go back and look at the previous cycle once again here for perspective, right? From the initial breakout in October 2020, right the way up, we had a few retests, 1, 2, 3 retests on the way up before finally losing it. Now, if we lose the 50-day EMA definitively, not just a little dip under, not some wicks under, not just a candle close or two, but like definitively lose it, that becomes very problematic for our continued strength of the bull run here. Would not love to see that. So we'll see, of course, how it plays out. But remember, last cycle, we had multiple retests of the 50-day EMA. So that's just one indicator, of course. There are a lot of others that are showing there's plenty of fuel left in the tank for this market cycle. We can see here, by the way, this is the 1 day here for Bitcoin. You see the MACD trending down pretty heavily. You might say, well, look at that MACD right there. That surely market cycle peak right there, man. It's over. Well, no. Look back here again in 2021. We had 1, 2, 3, 4 major run-ups, 3 really big ones, run-ups in the MACD, which signaled local tops, followed by multi-week corrections, which is all totally normal. Nothing to freak out about. It happens all the time in this market. Great chart here from Jimmy. He says, imagine selling here right before things get really fun. Credits Max BTC for this chart. So you can see 2017 cycle, 2021 cycle, 2025, 24, 25 cycle. So we are here, current price action. Previous cycles, we were in a very, very similar situation in the same years. Okay, same month, same year. Bitcoin halving year. This is where we ended up at the end of the years. That's what happened afterwards, okay? Interesting. Tech Dev here, paying attention to high time frames, offers the best chance to trade the cycles. 30K was not at the top because high time frame expansion had not ended. 50K was not at the top because high time frame expansion had not ended. 70K, 90K, etc. And high time frame expansion still has not ended. This is the monthly logarithmic MACD. You can see here. It's been running up nicely, but not done yet. Now look, this is just a small sampling of signals. There's a whole bunch of different things we can look at. Now, if this truly was the market cycle peak back at 108K and it's all over from here, then every single model that we have around Bitcoin is essentially broken. There might be a couple charts you can look at and say, well, see, that was the big proving point. It means the Fibonacci's done. It means Pi cycle done. It means RSI on the weekly and monthly and all that stuff. All these big factors, all the on-chain indicators, done. None of it matters, I guess. All we have to do is sit around and watch what the Fed's going to say or not, because Bitcoin's now so correlated to the stock market, none of the other shit matters anymore. I don't think that's the case. It feels like, even though it's a macro-driven correction right now, it's a relatively standard correction within the cryptocurrency markets. Previous cycles, we had China banning Bitcoin and macro dysfunction and all kinds of stuff happening, which create these big correction events. But it doesn't mean that the cycle's over yet. Now, we can still see the cycle end sooner than a lot of people expect. March, April, right? Whereas a lot of people are now expecting, and maybe it does run until the end of 25 or into early 2026, we've been seeing now. Wouldn't be shocked to see that. Maybe Trump really does pull off the immaculate golden bull run. But still a lot of macro things to worry about. And that's what the market is showing us right now with this price correction. And more on that in just a second. But a real quick update for you guys. The Beam node sale is still going on. Now, these are currently $1,250 a piece. You'll get a 5% discount using the link down below in the description, by the way, if you want to grab yours. Beam is one of the most bullish gaming projects in crypto. They're launching Beam AI as well to bring all kinds of AI features into cryptocurrency gaming. These guys have been at the forefront of gaming more broadly. And here's the crazy deal with their nodes. So they're running nodes right now, node sale. And if you're worried about being tech savvy enough not to be able to run a node, you can actually delegate your node out to a validator and just get rewards. You'll pay them 5% of fees or whatever, but you'll get all the rewards still, just a little bit less because somebody else is going to do the work for you. Okay? So these things actually come as an NFT, which you can actually flip later if you want, so you can get liquidity for your node, which is actually pretty nice. Now, they're currently $1,250. Next week, they're going to go up 3x in price. So if you want to get on board with these, now's the time to do it, obviously. And here's the thing. When you get a node, what are you going to get for that? Well, you're going to get all the transaction fees paid out to the nodes, plus you're going to get all the on-chain DEX fees from Beam paid out to the nodes as well. And the guys at Beam are taking literally half of their treasury, which is just packed full of all kinds of stuff. $250 million treasury here, packed full of like AVAX and all that kind of stuff. And they're going to distribute half of that out to node runners over the next 4 years. So these things could provide some nice passive income. So if you're into crypto gaming, you're looking for some passive income nodes, well, there's a link down below in the description where you can get yours with a 5% discount. Very limited time sale, because remember, in just 4 days, these things are going up 3x in price. Okay, let's move on. So James Lavish says, if you're selling your Bitcoin in reaction to what the Fed said today, you have no idea what you own. 100% agreed. 100% agreed. Now, I know a lot of people top blasted altcoins. I get it. Okay, I know a lot of people took on too much leverage. I get it. I know people are scared of the macro. Oh, I get it. I know. At least Japan didn't raise the rates. Good God. Dan Tapiero sharing this from Zero Hedge. The last time China 1-year bond traded below 1%, and Lehman had just filed for bankruptcy. Bond market convinced that Beijing is about to unleash the mother of all monetary stimulus or quantitative easing. Commodities so far unaware. Dan says, danger in China. Do people understand? Second largest economy in the world right now, deflating. Fed concerns on inflation are wrong. Listen to that. The Fed concerns on inflation are wrong. Interest rates still too high in the U.S., and now fiscal policy will tighten. USD will strengthen. Liquidity is coming to drive Bitcoin. 200K next year is doable. Think about it. Think about it. China's a lot of market analysts, and China's already been stimulating, easing, shoring up the stock market, shoring up the property markets. None of it's been enough. And analysts are largely thinking that China is about to unleash, as they say, the mother of all monetary stimulus. And China is a major driver of global liquidity cycles. Okay? Keep it in mind. And once Trump comes in, he's largely thought that he's going to be weakening the US dollar to help carry out some of his trade policies and stuff like that. So that's going to, again, be good for crypto assets. Assuming he finds the right balance there and doesn't crash the global economy while he's at it, then a weakened US dollar will be good for risk assets at the same time that we're seeing monumental printing coming in, okay? Crypto Insight UK, shout out, dude. What's up? PS, buy crypto. If we were right here, China about to smash more money into the market than ever before. Their moderately loose monetary policy change and this below about rates about the same as 08 before they injected capital on a huge level. Yes. Kabisi letter saying about the Fed cut. So Fed cut interest rates to 25 basis points, which is exactly what 90% of the market participants wanted. But the S&P 500 just posted its largest post-Fed drop since March 2020. I don't like that date. Erasing $1.8 trillion of market cap. Why? Let's explain. Going into the decision, there was 97% chance Fed is going to cut basis after 25 basis points. Their 25 basis point cut marked 100 basis point cuts in 2024, continuing the Fed pivot. However, markets price in Fed decisions well before they're actually announced. In reality, today's market reaction had nothing to do with the rate decision. Rather, it's about the Fed's outlook for 2025, which shifted sharply in the hawkish direction. As seen below, the Fed revised their 2025 outlook from 3 rate cuts to 2 rate cuts. I know what you're thinking. Let's all panic and lose our minds because we're only going to get 50 basis points of cuts next year, not 75 basis points of cuts next year. I know. Plus, there's the quantitative tightening measures and the scary specter of inflation coming back, which the Fed's concerned about. But then we have analysts saying there's so much deflation that's about to happen in China, it probably doesn't really matter what happens short term with U.S. inflation, that things are just gonna go crazy anyway, okay? Meanwhile, the Fed raised their PCE inflation expectation from 2.1 to 2.5% at the end of 2025. Furthermore, the Fed now sees inflation at 2.1% at the end of 2026, still slightly above their 2% target. Now, the Fed's been wrong basically on everything all the time when it comes to inflation. Will they be right this time? Well, if they are right this time, inflation at 2.5% by the end of 2025 is not a big deal. That's the crazy thing. We just came down from like 9.5% inflation, man. Okay, this is not the level of inflation to worry about. But if inflation does rear its head in a more dramatic way over the next few months, then yeah, we could see a big problem come into the markets, right? God forbid the Fed actually starts raising rates again. Oh man, that'd be not good. Anyway, right now we are on a macro scare for the cryptocurrency markets, okay? Last few weeks we had big leverage unwinds. A leverage unwind, that's a different situation. That's driven solely by market mechanics. Macro is something that can definitely spook the market more and create a more substantial spot selling driven dip, okay? Okay. That being said, lots of opportunity in the markets right now. I just want to talk about a few of the things that you can be looking for if you're a crypto trader or if you are just looking to grab some good spot positions because you don't believe you're on board the train of, I don't believe the crypto cycle's over. Now, if you really believe the crypto cycle's over, sell, take your cash, walk away, see you later in 4 years, okay? If you don't believe the crypto cycle's over, like me, then there's a lot of opportunity coming up here, not so distant in this market cycle. Look at Solana on the daily. Damn, that MACD has just been smashed beyond belief. What a just puke show this has been. That being said, it's getting very, very, very close to a zone of big opportunity, okay? So we smashed right through the support at 200, no longer holding a support, obviously. Coming all the way back down here to, well, these previous areas of price resistance, maybe flipping those into support potentially. Let's see. But what is interesting, right here, we are almost oversold on the RSI on the daily. Not technically in oversold territory yet, but gosh darn close to it. And maybe close enough. We can see previously when we got that close was followed by big bounces in the market, like right here, August. This is the RSI right now is as low as the Japanese yen carry trade unwind day, which was like monumentally worse than the markets. Okay, just for perspective here, or back in the June 24, equally low RSI. And after all these situations, okay, back in June, price bounced from 120 up to 190 in the next month approximately. In August, we bounced from 109. Well, it's a bit of a rough ride there, but to 160 in just a few days, actually. So it's a very strong reversal. Not guaranteeing, of course, that's what's going to happen right now. But as we get closer to this oversold reading here, it is opportunity. Now, this is on the daily, okay? It's on the daily. You zoom in on the 4-hour charts, we're seeing a lot of coins already in very strong oversold territory. Like AVAX, man, it's crazy, dude. Some of these charts are crazy. We've given back a whole month of gains in a day. It's nuts. That's crypto for you, man. As we always say, be ready for those crazy crashes to come at any second in the cryptocurrency markets, because they do come. And here it is. But look at this 4-hour chart here. MACD very strongly down. RSI showing strong oversold conditions. You can go back and look. Last few times we had these strong oversold conditions on the 4-hour. We saw the price of AVAX run from $22 to $60 over the next month. Okay, go back to the time before that. Okay, we saw the price run from 25 only up to about 27. Kind of maybe a false signal, that one a bit. But you can see there's a lot of great opportunities. Look here, probably a more strong oversold signal. This back here in August, price running from $17 to $28 within a month. Okay, not saying that's guaranteed is what's going to happen or anything like that, but these kind of oversold signals generally provide opportunities in the market. Okay, what about this one? This is Phantom. Rebranding to Sonic. It's a bullish rebrand, guys. Look at the charts down. It's a bullish rebrand right now. Fuck. Anyway, jokes aside, got giant Phantom bags. Look at this. Again, MACD very, very strongly oversold. RSI very strongly oversold as well. And previously, again, when you see those kind of strong oversold RSI signals, they're usually followed by decent bounces. No guarantees, obviously, in the markets. It's markets. There's never any guarantees. But usually, these are the kind of signals that you want to be looking for a buy the dip kind of scenario. That's when the dip's actually in the buy zone. See, a lot of people want to rush into buying the dip. And we were talking about this in the Discord yesterday. Like, you don't need to rush. You can just, if we want to add a bit, dollar cost average in on the way down, fine. But if you're looking to buy the best spot on the dip, wait for these strong oversold signals like we're currently seeing. Now, that's the 4-hour signals, right? The strongest signals, in my opinion, come on the daily during a bull run. And yeah, if you see like weekly RSI being dramatically oversold, guess what? You're probably in a bear market. Okay, you're unlikely to get that kind of reading in a bull market scenario, but you can get oversold dailies. And an oversold daily in a bull market could be a really great opportunity. Anyway, let me know what you think. Are you buying this dip? Have you started adding positions? Are the indicators adequately oversold for you to start adding in? Let me know your thoughts down below, and I'll see you back in the next one. Peace.